welcome to EBAday 2022 in Vienna. I'm Hannah Wallace, and with me now to discuss de-risking is Timo Zwez from Banking Circle. Timo, thank you very much for taking the time to speak with me today.
Thank you for having me.
No problem at all. This is a really interesting topic, isn't it? And I've had a lot of the delegates discussing it throughout the event already, so looking forward to this. And I know that Banking Circle has actually recently released some research on the topic, so it'd be great if you could shed some light on that. What were the key findings? What were you setting out to find?
Yeah, pleasure to do so. So I think de-risking as a topic is nothing new. It has been around for centuries, basically. So banks always adjust the risk according to markets, and with that, they adjust what the output will be. And I think, de-risking, when you look back a little bit, we have seen two major events over the last, 10 years or so. One was the financial crisis, where basically the regulator woke up overnight and said, market is not regulated, we need to do something about this, and they put steps into place and changed the setup. And then market went on with it, but really like 2012, the second catalytic event for me was when there was a big fine issued by the regulator for HSBC. I think it was 1.2 billion for money laundering. That woke up a lot of people, and they realized, okay, the regulator is not joking and we need to do something about this. So what usually happens then is that you adjust your risk because you don't want to have that exposure to that risk. And usually banks, when they do this, someone has to be reduced in the service, in the products, and that's exactly what happened. So the de-risking happened in geographies. It happened with client groups, and when it comes to my profession, the payment sector, the correspondent sector, correspondent banks also reduced the counterparties they work with. So the outcome was, in some extent, quite dramatic for some of the smaller banks or weaker banks or financial counterparts in general who couldn't live up to the new standard that was suddenly out there overnight.
Sure.
So I think it's a challenge for smaller players to cope with that.
All right, thank you very much for setting the scene. And I think it's worth reflecting on the current geopolitical and economic landscape, because this is no doubt adding uncertainty to those smaller banks and non-bank financial institutions. So that's what the research goes into as well. Tell us, what were the key issues you explored, and what were some of the strategies you found to tackle those challenges?
Yeah, I think an interesting outcome was that a lot of banks found them in a position that they suddenly have to deal with more partners. Actually, 77% said in our study that they have more partners, correspondent banks partners, than they had 10 years ago, and only 6% they said they have less. And of course, when you have much more partners to take care of, you have more costs associated to it. So it's more cost, more labor, and the whole setup is going the wrong way. You're actually in a position where you want to protect yourself from a changing environment. You're already in a weaker position because your network is falling apart, and on top of that you have more costs associated with it. And I think the kicker on this whole thing is that we're living in a global economy, so you can't get rid of these counterparts at all. You actually need them. So also our study found out that customers are likely to go somewhere else if they don't get the service, if they don't get the access to the global network, for instance. And customers ask for that service because they do their payments on platforms abroad, not exactly at the shop around the corner anymore.
Sure. All right. So that's a really interesting point. So taking all of that into account then, I think many believe in an alternative to the existing cross-border payment solution. So my final question then is, do you think this alternative is coming? Is it on its way?
Yeah, I think we see this already. I mean, today on the EBAday, we had a very interesting speech this morning, and I think one takeaway out of this was that technology is a good thing. You don't need to be afraid of this. And you just need to be proactive with technology. You need to embrace it, and it could help you to solve problems in a way. I think there is no general solution for de-risking. There is not the solution where you said, I go to one bank and they do it all for me. It will not happen. But I think there are several smaller solutions out there that could be in a plug-and-play version, fitted nice and neatly into your value chain and optimize it. So I think the solution is, if you are a partner that is under stress by losing your correspondent network, look for partnerships that can enable you in your value chain, improve the value chain with a very simple plug-and-play solution.
So watch this space, it's safe to say, and some very good advice weaved in there as well. I'm hearing the importance of partnerships. But Timo, thank you so much for sharing your insights today. I'll let you get back to the event, but thank you.
Thank you so much for having me.